the Dallas Business Journal Thought Leadership Podcast, sponsored by Texas Capital, featuring top professionals and providing insight to keep business professionals informed. On today's episode, the president and publisher at the Dallas Business Journal, Ollie Chandock, is joined by Matt Scurlock, Chief Financial Officer at Texas Capital.
Good afternoon, folks. I'm Ollie Chandock, president and publisher at the Dallas Business Journal. Welcome to the second in a series of discussions with top executive leadership at Texas Capital. Today, we'll chat with Matt Scurlock. Matt is the CFO at Texas Capital. He's played a significant role in the multi-year transformation at Texas Capital, and he's here to share insights on the economic forecast and how it affects banking and bank earnings in the year ahead. Matt, always great to see you. Happy you're here.
Good to see you, Ollie.
Matt, let's jump right in, right? We're at the start of the new year here. What is your assessment of the economic forecast that we have ahead of us, and what is shaping that assessment?
I think as a banker, Ollie, you generally always start with interest rates. After a period of essentially zero short-term interest rates, the Fed in 2022 embarked on the most aggressive tightening cycle that we've really ever seen. So they moved further faster than at any point in U.S. history. The intent being to quell the inflation largely caused by all the economic stimulus associated with COVID. Rates began to peak out in mid part of last year before the Fed ultimately started to cut in the back end of last year. And people, I think, oftentimes think about interest rates solely as short-term rates, but the market's discounting at all times expectations for rates 30 years plus. So the movements at every point of that curve impact the cost of borrowing, impact the availability of capital for clients, and certainly impact how banks want to manage their balance sheet. So as the Fed is tightening, that results in limited liquidity in the system, which results in fewer bank loans. So bank loans last year were at lower rates than any level in the last decade. So banks were lending less money, which is ultimately resulting in a decline in economic activity. Cost of liquidity was quite high. The Fed largely, I think, accomplished what they thought they wanted to accomplish. Today, you have a bit less clarity on the rate outlook, which is causing some folks to be hesitant expanding CapEx, some folks to be somewhat hesitant in transacting. It's difficult to know exactly when that rate outlook is going to become more clear, to be candid with you. I think a lot of folks at this point are trying to work their way through what is a pretty dynamic new president. Potential concerns around DOGE, you got concerns around tariffs, you got concerns around geopolitics, all of which are likely impacting people's ability to transact with confidence. Our view is that potentially see that get a bit more clarity toward the end of the year. You likely see the U.S. government address spending, then contemplate taxes closer to the end of the year, which could give people a bit more confidence on when and how to transact.
Yeah, there certainly is a lot of uncertainty and a lot of considerations for us to take into account. Now, I want to get a little bit into the weeds here. How have you built Texas Capital's balance sheet specifically to be positioned for this uncertainty that we're facing today?
Yeah, it's really interesting. So we do this economic survey, and folks are certainly cautious as business owners, but the business owners in Texas are generally going to be much more optimistic than those across the country. And that optimism this year was expressed by about 80% of respondents suggesting that they were either as optimistic or more optimistic about the economic outlook, which for them was likely to result in additional CapEx, primarily associated with either new products and services or long-term technology-related investments, which would suggest to your earlier question that potentially there is more borrowing in the back half of the year. Texas Capital over the last 4 years, Ollie, has really spent a lot of time, effort, and resource in trying to develop a platform that can solve problems for our clients across really any market or rate cycle. So we're very happy to provide traditional bank debt for clients that are looking to expand, but also have solutions to access different types of capital, should that be a better fit for the client and where they are in their journey. In addition, we've got products and services that'll help them manage rate risk, help them think through their cash, their payables, their receivables, how to manage their working capital. So our view over time is that the role of the bank is to be the financial intermediary. Access to capital should continue to deepen for your clients. We increasingly just want to be a conduit for our clients to access the type of capital that they need and have a set of products that enables us to go to them and serve them throughout market and rate cycles.
Now, Matt, I want to go back to what you said about the sort of the pervasive optimism with Texas business leaders. It's certainly something we've experienced as well. In your opinion, what factors are at play that are helping to make this significant majority of these business leaders anticipate revenue growth in the year ahead?
Yeah, I think we're all quite fortunate to live and work here,
Yeah.
Ollie. Yeah, I think we're appropriately proud of the franchise that we have and will continue to build, but we owe a lot to just working and living in the state of Texas. It's an incredibly conducive economic backdrop for capital formation. I don't believe that trend's really going to slow. And I think you see that stability play out in people's willingness to really invest and grow the employee base in the state.
That is terrific. We're certainly very pleased to be in Texas as well.
At Texas Capital, we are focused on developing the next generation of proprietary payment capabilities, aimed at providing a simplified banking experience when our clients access their preferred channel of treasury services. This new generation of payment capabilities allows our customers to work directly in their preferred platform to generate payments, automate GL functions, and access the emerging instant payment technologies. The technology that has underpinned our transformation at Texas Capital is ready and available for our clients to use. Discover how we're meeting our customer needs of today and developing solutions for the future.
In your view, how does Texas Capital's infrastructure, products, and services position Texas Capital to help these firms that are very optimistic?
Yeah, I think traditionally the business owners in Texas have been really forced to choose. You have a lot of great financial institutions that are headquartered in the state that can make local decisions and really invest for the clients and then really invest in their communities. You have a second set of financial institutions that are global in nature, have a broad suite of products and services, but really lack that local decision-making. So when Rob showed up at Texas Capital, the strategy was that eighth largest economy in the world, this state deserves a full-service financial services firm where you have local decision-making and talent that's in your market, but a set of products and services that could compete with global banks. And year 4 of the transformation, I really feel like we've been able to bring that to our clients. So it's hard to describe in a podcast setting,
right?
But when you show up across from a client completely agnostic to the products and services that client ultimately needs, you're just there to solve their problem. It's unfortunate, but that is actually a totally differentiated experience. And over time, we just didn't see that increasing. So we invest a very large amount of our budget in technology-related spend. The majority of that shows up in client-facing products and services. It's a portion of our non-interest expense, which is the fancy bank term for expense,
right,
that we're just really unwilling to touch. We want to perpetually have a portion of that budget that's protected for new technology-enabled product services and perpetual improvement to that client experience.
And Matt, currently the only full services financial firm based in Texas.
Well done, Ollie. Yes.
Got that one. All right. So let's do a little bit of forward looking. How will bank earnings be affected by what we've talked about here, whether it be the economic outlook for the year or all of these businesses projecting growth?
Yeah, I think a lot of bank earnings, depending on the size of the bank, is predicated on changes in interest rates. So the majority of a bank's earnings stream is going to be the difference between what they pay for deposits and what they make on a loan. And should interest rates stay high, which there's certainly a contingent that believes that's going to be the case, it's going to be difficult for them to really see any improvement in earnings because that cost of liquidity is going to stay very high. If you're a firm that has a broader set of product capabilities, again, like Texas Capital, your ability to serve your clients agnostic to where interest rates are should show pretty dramatic improvement in earnings through the duration of the year. There's a school of thought that suggests that you're going to see a lot of consolidation in the banking industry. I think there's a lot of traditional models that saw a bit of disruption post Silicon Valley Bank and some teams that are likely better off to consolidate. So we view that we'll have a pretty significant role to play as an independent player in the state for a long time and excited to deliver some, we'll call it solid earnings this year, Ollie.
Solid earnings. Now, so you touched on it a little bit, but do you see the catalyst for industry consolidation within the bank?
Absolutely.
Yeah.
Yeah, you'll absolutely see a catalyst. So I think increasingly banks acknowledge the need to invest at pretty heavy levels to support the right type of client experience, to build those products and services that not just satisfy today's demands, but enable clients to grow from business banking middle market to large corporate. To facilitate that type of investment, you likely do need a bit of scale. Texas Capital was quite fortunate to 4 years ago embark on this wholesale transformation where the market believed that the outcome associated with all of our investment was worth waiting for. Bank markets are unlikely to give people that opportunity today.
So I'm going to tap into your expert advice here and your expert, let's say, wisdom, right? So how are Texas businesses, or how should Texas businesses balance growth with the pending risk of potential economic headwinds?
Yeah, I think that's a great question. I'll speak to how we do it, and maybe that can shed some light on how we think clients should do it. So we have a fundamental principle of financial resilience. We say all the time we want to be resilient to market and rate cycles. So we carry around a lot of capital and liquidity, which candidly all is just an expression of humility. It's just saying that we don't have complete clarity all the time into how things are going to evolve in markets or in politics or in the products and services that our clients want. And what we always want to do is be able to dutifully fulfill that promise to a client. And our balance sheet's what enables us to do that. So we generally suggest the same things to our clients. There's likely not an opportune time to go bet the franchise on a single move. Instead, just operate with the foundational principles that you know are going to support long-term value accretion. And we're happy to support you across that entire journey.
So Matt, last thing I have, as CFO, what are you most looking forward to for Texas Capital specifically in the year ahead?
That's a great question. So when we laid out the strategy in 2021, we set out a set of markers, primarily financial metrics that we would achieve by 2025 that would define the progress that we had made on fulfilling our promises to our investors on what we thought the franchise could ultimately become. Our current public guidance would suggest that we hit that in the back part of the year, which I think will be an incredible milestone for all the employees that have made Texas Capital what it is today. So we're not really going to stop at those financial markers. So we've spent a lot of time and effort and focus on trying to build a franchise that can create a lot of value for the citizens of this state. So we're really excited about achieving the goals associated with this part of the journey, and then candidly thrilled about what's coming next.
Matt, really enjoy the economic insights, all the wisdom you've shared, and thank you for spending time with me today.
You bet. Thank you.
Folks, join us next time to meet Amy Williams-Ramey, the Chief Human Resources Officer at Texas Capital. We'll see you then.
That was president and publisher at the Dallas Business Journal, Ali Chandok, and the Chief Financial Officer at Texas Capital, Matt Scurlock. You've been listening to the Dallas Business Journal Thought Leadership Podcast. Texas Capital is the collective brand name for Texas Capital Bank and its separate non-bank affiliates and wholly owned subsidiaries. Please visit texascapital.com to learn more about Texas Capital, its products and services, and the respective entities that offer each. For deposit products, member FDIC.